It's time to figure out what to do in 2023. That's what BlackRock is doing, looking ahead with its thematic outlook and saying there's some themes that may be poised to shine within growth and technology next year. BlackRock U.S. head of thematic and active equity ETFs, Jay Jacobs, is here with us now to talk us through the plan for next year. And among other things, Jay, I was just looking at the NASDAQ 100 and noticing for this year, only 20 of its members are higher. And I know that there are a lot more sophisticated ways of looking at dispersion within the indices. That's just one off-the-cuff example. But the point is that things have been going down together. So how do you then assess what's going to go up from here?
That's exactly right, Julie. I mean, we saw this starting in 2020 and through 2021, where growth stocks rose together. And it was fantastic for investors who were allocating more towards growth stocks. And frankly, you didn't have to be that choosy. That buying growth was really a winning strategy. The reverse was true this year. What we believe for 2023, though, is that we're going to see more differences. We're going to see some growth areas that do well and some growth areas that don't. A lot of that is being driven by the economic environment, where higher interest rates and potentially, sort of an economic slowdown is going to impact the economy differently. So in our thematic outlook, we're very focused on targeted plays where we think it can survive the economic storm we're in today, as well as provide long-term growth opportunities.
And so within that, you mentioned the Fed or alluded to the Fed there a moment ago. Is there anything that the Fed could do from your perspective that would actually kind of throw off the theme of some of the new growth areas that we should be tracking?
Yeah, I mean, look, the Fed is dictating a lot of what's happening in the markets right now. If we saw that interest rate increases were halted, or even if we saw interest rates being cut, then we might see more of a 2021 situation where kind of a rising tide lifted all growth stocks. But that's not really in our outlook. We view higher interest rates for longer. Inflation has proven to be fairly persistent, and therefore stocks are going to behave differently. We're going to see, some tech stocks that are more profitable, really outperforming tech stocks that are more moonshot technologies, which had a great run in 2021, but not really the environment for them in 2023.
What are some great themes you're looking at for next year, Jay?
Yeah, so within tech, two areas. So profitability is key, and how they can continue to be resilient in this economy. So we look at robotics and we look at cybersecurity. With robotics, this is an established industry. It's growing quickly. It's also solving an economic challenge right now, which is labor shortages and rising labor costs. So companies, we believe, are going to continue to invest in robotics and automation. Secondly, with cybersecurity, we see this as a tech staple. We're seeing layoffs. We're seeing companies cut back on discretionary spending. One area we don't think they're going to be cutting back is cybersecurity. It is too integral to the data-driven world that we live in. That gives it more defensive properties than other software companies.
And then not just in technology, but in other growth areas. I know you're looking at biotech and also looking at not the lack of cutting, I guess, but where is the actual spending going to be within that industry?
Well, healthcare broadly is an excellent place to be because over 49 of the last 50 years, we've seen increased spending in healthcare. Now, specifically within healthcare, where we get excited is, what are the new drugs that are in the pipeline that could be growing going forward? So what are in stage 2 trials, stage 3 trials, up for FDA review? There's some really compelling drugs in areas to treat cancer, in areas to potentially vaccinate against the flu using the same technology that we use to vaccinate against COVID. So when we see this kind of maturing pipeline of breakthrough drugs, that can be really powerful as these companies go from spending on R&D to suddenly being revenue generators with approved products.
BlackRock's Jay Jacobs. Jay, always a pleasure to get some of your insights and perspective. We're going to be tracking these themes very closely, as we know you will too. Thanks.